Hey traders, welcome back to the channel. Today I got a special video going over what I consider my 3 most essential day trading indicator combos. I get a lot of questions and comments about this, so I just wanted to show you the 3 things that for me are a must-have when it comes to my own day trading. Now, if you want to learn a lot more in detail about all this indicators and the strategies I use with all of them, you can check out my day trading with volume profile and order flow course, or I also have a lot of free content here on my YouTube playlists. But basically, the 3 things that I will talk about in this video that are a must-have for me are my session volume profiles, the session VWAP, and the cumulative delta. Okay, and I'm gonna go about explaining each one and the reasoning for why I think they are so important. I'm using here a S&P 500 futures chart. So this is the E-mini. We're right now on the March 2024 contract. This is a 3,000 tick chart. So this is another thing which I don't include on the 3 indicators, since it's not really an indicator but most like a setting. I know a lot of people use like a 5-minute candlestick chart or a 1-minute. I like to use tick charts. Each market is going to have its own sweet spot, depending to what you're used to. For me, I like to use the 3,000 ticks for the E-mini market. Okay, so let's start off first. Let's talk about the session volume profiles. So these volume profiles, you can see I have them in 2 different colors. I do that on purpose because I like to divide my sessions into the extended trading hours, or what was considered Globex, which goes from 6 p.m. Eastern till 9:30 a.m. Eastern the next day, opens on Sunday night until Friday close of that week. And we have 5 extended hour sessions in the week and 5 regular trading hours, which these ones are going to be the main stock market hours. This is where we're going to get the bulk of the volume and trading activity. So obviously, regular trading hours are the best times to be trading, but I do occasionally trade the Globex session, and I always use these levels as a reference for the regular trading hours. So these hours, regular trading, goes from 9:30 a.m. Eastern up until 4 p.m. Eastern when there's the stock market cash close. Then we got the settlement at 5. And then from 5 to 6, we have an hour closed. So as you know, if you trade, for example, futures, that's a 23-hour market. If you're doing, spot Forex, that's 24 hours, crypto, 24 hours, etc. Okay, so this is the first aspect of my day trading combo. Second one is going to be VWAP. VWAP stands for volume weighted average price. So it's basically like a moving average, but we're going to be taking into account the volumes that are executed at each basically at each time or each period interval. In this case, the ticks, every 3,000 tick candle is going to have the measurement of the VWAP, and the VWAP is a great tool for measuring momentum during the session. In general, if you see VWAP pointing down, that means we're in a bearish environment. When it gets more flattened out, we're sort of more consolidating. And when it starts pointing up, then we start more trending. But also, I like to use it as a dynamic support resistance level, where if we're underneath VWAP, then the play is more to the safe side, is to be short in the market. Once we do break above VWAP and it starts curving upward, then that's when we would start focusing more on longs. And you can see, like we had here last Friday, we came right around the 10-15 mark. We had a retest and rejection. Then we did come back and we broke through, and we had a very nice rally all the way up into the pretty much the valley area highs from the extended hours profile. And then you can see we came back into it, and we had a very nice retest of this VWAP, and it gave us another large move up. So it's not guaranteed, obviously, that we're going to have rejections or bounces from the VWAP, but it is a very important point, not only to look for entries, but also to guide your overall bias for the session, and also to use as a target. Like if I was here and I got short somewhere around here, definitely VWAP would be one of the first areas that I would be looking for to scale out or close my position, etc., or just pay extra attention to monitoring it. And the last element is going to be the cumulative volume delta. So what this is measuring is for every candlestick on your main chart, there's going to be a corresponding candlestick formed on the CVD. And what this tells us, this is measuring the aggressiveness of buyers and sellers. This is showing us executed market orders to buy or to sell. This is very key because this is going to show us where the force of the market is pushing. Now, this is mostly, we have a lot of retail traders that are, very impulsive and FOMO and chasing, etc. So we do have conditions where we have divergences, and that's one of the main uses to look for this. For example, here you can see how we had continuous selling with lower high here on the cumulative delta, and price made a higher high here. So what this indicates is that the passive traders, the big traders using limit orders, are absorbing a lot of this selling pressure, and they push prices even further up in there, okay? But what you really want to see is once the chart and cumulative delta get in sync, that's when markets really start moving quickly together. Once you see that momentum starts getting very red here, and then market starts breaking down, usually that's when you're going to get very quick and impulsive moves. But cumulative delta, again, is a good gauge for the aggressiveness on the market, on the buy or the sell. You can see there is a scale here that starts at 0. When the trading session begins, we start at 0. So if we end up down here, we ended up at around minus 15,000. That means that we ended up with minus 15,000 aggressive contracts traded to the sell side, okay? And if we ended up above 0, that means it was overall a positive delta day, meaning delta is the difference between executed market orders to buy minus executed market orders to sell. So those types of divergences, either structurally like here, or when we have a single candle divergence where, for example, we have a big, like in this example, let's say we had this red candle here, but then we have a green candle here or vice versa, then those divergences are going to help us to spot where we have traders trapped. For example, like if we come into a swing high and we print a large red candle, but here we have green and green, that means that all this aggressive buying is mostly not taking this price anywhere. There's a lot of buying effort going on here for prices to not go through, okay? So that is a good gauge as well, and that's pretty much the combo of the 3 indicators that I love to use together when it comes to day trading. And I hope you all enjoyed this video. Make sure to subscribe, hit the thumbs up, and I will talk to you all in the next video.